Hello and welcome to another Daily Dose of Insights powered by Container Exchange. My name is Christian, and every other day we bring to the key news, stories, and data points that move container markets and hence your business. Today it's Wednesday, so we typically look at a few charts that move the world, at least the world of containers. Let me quickly share my screen to give you a little bit more guidance of what I'm talking about. We start with our very own Container Exchange Sentiment Index, where we look at the expectation of the market about the container prices in the weeks and months to come. So essentially the question is, do you expect container prices to increase, decrease, or stay stable in the upcoming weeks? And we built an index out of that. And as long as the index trends above the 0 line, it means that overall the industry is optimistic that container prices are to increase. And as you can see here, really since the end of Q1, beginning of Q2, we've always been trending in positive territory with a little bit of a dip around the summertime, around July, towards a very neutral stance of the industry. And since then, consistently positive expectations about container price developments, despite the existing overcapacity in the market, not only on the investor side, but particularly also on the container side. If you then look at what is actually happening on the market here, we are looking at our insights data, 40-foot high cube cargo worthy in Shanghai and Los Angeles. Los Angeles being the green line and Shanghai being the blue line. You can actually see that sort of up to July, up to the summertime, especially in Shanghai, the trend has been decreasing indeed. So in line with sort of a decreasing sentiment. And since then, there was at least a price stabilization in Shanghai for 40-foot high cube cargo worthy, so used boxes. In Los Angeles, the price trend continued to be negative, sort of dipping below the Shanghai line round about the beginning of October, but then since then recovering significantly and now remaining relatively on par with Shanghai. Now, the interesting thing is that Shanghai to Los Angeles is one of our most profitable one-way leasing stretches for container owners. And why is that so? Well, if you look at this, the current price delta between Los Angeles and Shanghai is round about $170. So Shanghai is more expensive than Los Angeles by $170. That means that if you buy a container in Shanghai and you sell it in Los Angeles, you lose that amount. However, if you then, and now I'm looking at the leasing trends, if you rent out that container on a one-way basis from Shanghai to Los Angeles, right now you can earn around about $800 in pickup charges that is being paid by the user. And that means on an investment of roughly, what do we have here? Roughly $1,700, you'll make a return of $800 pickup charge that you get immediately on exchange. Less the negative price delta, less 170, less a few repairs, so let's say 200. So it's a $600 return on an investment of $1,700, so 30%. That's quite nice, I would say, especially because your internal rate of return will be even higher because a big chunk of this will actually be returned right at the pickup. So that's how it works on exchange. The unit is picked up. The pickup charge is credited immediately to the owner of the box. So that means you invest 1,700, you immediately get 800 back. So your investment is really only 900 right out the gates. And then of course you get that 1,500 roughly a little bit later. Let's say 90 to 120 days after the box has been returned. So that's just a sort of a quick snapshot on that stretch. I thought that was very, very interesting because it ties into our sentiment index in terms of price developments, but also it ties into sort of course, what are the most profitable container traders doing on the exchange. Very interesting market developments, market movements right now. Of course, you can also do forward gate buy deals on exchange. So you could even actually lock in your sales price right when you do your purchase, minimizing your risk even further. So all of that is possible on exchange. If you want to learn more, of course, feel free to reach out. That's it from me, from us for today. Thanks a lot for tuning in. Just a very, very quick sort of rundown of the market and what's happening. Have a fantastic rest of the week and see you all on Friday. Take care.